Ticker symbol PANW, Palo Alto Networks. We've just covered the earnings on the extra channel. In fact, it's happening as we speak right now. That's what my extra channel is broadcasting. So I wanted to follow up with this. I've got some news here that's just in and a brief analysis of the earnings that we've just heard. So if you like Palo Alto, go and check out our earnings on our extra channel. We have a network of channels, and we are covering cyberspace here on the main channel. On the extra channel, we're covering Palo Alto. So go and check it out. But as you can see, the stock is up. It's just pulled back a little bit, but looks pretty healthy to me. Let me share you the news around the earnings. This news is out just literally minutes ago. One of the benefits of having a premium plan for Seeking Alpha. If you want to try Seeking Alpha, by the way, click above the link or my head or down below in the description, and I will give you my pro plan, which you can try for free. You can't get a free plan or a discount from anyone unless you've got a referral. So there you go. There it is in the chat. You might as well go and check it at least. All right, there you go. Right, Palo Alto Networks gains after Q4 results. Outlook tops estimate. Nice beat as well. Let me scroll down. Palo Alto ticked up during early post-market trading after its latest earnings report topped consensus estimates. The Santa Clara, California-based cybersecurity company reported its financial results for the quarter ended July 31st on Monday after the markets closed. Palo Alto Networks reported earnings per share of $1.51, which is more than the consensus estimate of $1.41. Its revenue totaled $2.2 billion, which is more than estimates of $2.16 billion and represented a year-over-year increase of 12%. It was bolstered by its subscription and support revenue, which increased 18% year-over-year to $1.71 billion. Revenue for the entire fiscal year of 2024, which ran from August 23 through July 24, totaled $8 billion, which was a 16% more than the year prior. Our top line strength showed through in our remaining performance obligation and next generation security ARR, said Deepak Golechha, Chief Financial Officer of Palo Alto Networks. At the same time, he has successfully balanced portfolio growth as our non-GAAP operating margins increased by more than 300 basis points for the year, with strong cash generation marking one of the best years for Palo Alto Networks. Fantastic. I'm going to give you some analysis in a second. Palo Alto Networks generation security ARR increased 43% year over year. Looking ahead, Palo Alto Networks expects earnings per share for the quarter in progress to have a midpoint of 148, which is more than the consensus estimate of 143. So expecting to beat again. Okay, great. And if you want to access Seeking Alpha, look below in the chat and you'll find all my links for it. Let me share with you now the analysis using my alpha spread, which is a visual presentation. I like this. I also have this. You can use this for free. Go and check this out as well. You can see 7.8 billion, and we're expecting a nice steady upswing, 4% on the most recent range, and then we're expecting a nice steady upswing there. Operating income, expecting a big jump and then going up nicely as well. Net income, same thing, up 8%. I like all of that, looking very nice indeed. Investing cash flow, which is a positive, down 3%. Operating cash flow up 3%. We like that, 3.2 billion. Let me scroll down here. If you want to access all of this software, it's my it's my alpha spread. Links are below. You can get all this software for free, or you can go pro and use my membership discount, which basically gets my membership for free. There you go. 17.9 billion in assets, 2.9 billion in cash, 13.5 in liabilities. Let's look at how much debt they've got. Any long-term? No. Any short-term debt? No. No long-term or short-term debt, just ongoing regular normal expenses. So we've got a reasonable balance sheet. We do have 2.9 billion in cash. Not too amazing, but we have no debt though, just running costs. So it's not too bad, is it? Pretty good. Gross margin 74%. You might want to check with the competition as well. ROCE 11%, ROIC 17%, ROA 15%, and ROE 86%. Some good numbers there and moving in the right direction. Profitability, 61%. Well, that's now going to go up. This was the previous 61%. That's now going to go up. 64% solvency. That's going to obviously increase as well with what we're hearing tonight. So very good. The upside, 3% or 20% at best on Wall Street, with a 19% downside. It's regarded as expensive at the moment. That's the only problem. 3.49. No real short interest here. So no short squeeze or no real downward pressure. There's the competition. If you want to compare to other businesses, you can use my software. Insiders have been trimming off recently. If this was a full review, I could tell you who's been trimming off, but we haven't got time for that. We're just doing a very brief review of this stock. We will cover more. If you watch this video and you leave me your thoughts and comments and you want a full analysis, price targets, we can get Sensei on the case, do a full chart and analysis, give you the buy zone, sell zones, support levels for all of it, and we can do that for you. Just leave me your thoughts, comments below. I will reply to all of my members, and if you like it and you want that, I will provide that service for you. All right, there we go. Click above my head for all the links down below in the description. You might want to go and check out all of the alpha spread and seeking alpha. You might also like to go and check out the earnings. I've just covered the earnings. I will put the earnings here. And here I will put a playlist for Palo Alto, so you can check all the information as we bring out the charts, as we bring out the buy zones, sell zones. They'll all be down here in the playlist. Over here, you've got the earnings, which we are literally recording as I speak on the extra channel. Till next time, as always, take care of yourselves and each other.